AMC stock at the time of recording this video is up about 2%. Now we have slightly pulled back from the highs of the day that we've seen, up in between 5 and 10% for a majority of the day. Now why you are actually pulling back really comes down to overall market sentiment. The S&P was positive by about 0.5% today. Now it's down about 0.25% following the release of the Fed minutes, and we'll talk about exactly what the Fed said. It was not very bullish, and that's why kind of everything is taking a hit here right now. Now, on top of that, like we reported to you guys yesterday, you do have a retirement pension fund that is suing AMC to delay this vote and conversion ultimately from APE into AMC. So we have that to talk about, as well as new updates from Interactive Brokers, and like we predicted, the cost to borrow rates are well in the 700% range. So the work is cut out for us here in this video. Hit that like button and subscribe to the channel if you are here, if you are active in the markets, if you are trying to better your financial situation. This is the place to be, and I highly recommend that you stick around a while. So first things first, AMC up 1.35%. Let me just tell you guys right now, this is a positive development yet again, where AMC is bucking the overall market trend and is positive, whereas the markets are negative. So just that right there, that's the first obvious elephant in the room that I want to point out for everyone that is unfamiliar. Now, on top of that, you are getting a lot of technical bullish indicators, and you are getting further above this descending line of resistance. This is the line that you really have not been able to hold above for a multiple day period ever since June of 2022. And the fact that we are doing this here on Wednesday and AMC reports earnings next Tuesday, this could be a very positive thing for AMC heading into those earnings, and that could give us a bigger move than not to the upside. After all, estimates for AMC earnings are going slightly higher heading into earnings, suggesting that people are fundamentally getting more bullish on AMC, and ultimately, fundamentals are what squeezes shorts out of their short positions. On top of everything else that is going on with AMC, better fundamentals than not is not going to hurt anything. Now, let's get straight into this video, and I want to start with this. The legal action that Ala County employees, I'm not even sure if I'm pronouncing this right, Allegheny County Employees Retirement System tries to delay the vote for AMC stock to be converted into AMC common stock. The vote will also include a 1-for-10 reverse stock split. Now, what they basically go on to say is this, quote, "This action challenges a course of complex and disloyal corporate engineering by the defendants," described by AMC's Chief Executive Officer and Chairman, Defendant Adam M. Aaron, as an exercise in 3D chess devised to achieve a simple aim: eviscerating the voting power of AMC Class A stockholders in order to force through approval of an proposed dilutive share count increase that those stockholders repeatedly had rebuffed and were not willing to support at the corporate ballot box. So basically a fancy way of saying trying to dilute shareholders when they don't need to, and kind of dismiss your average investor's voting power through essentially corporate loopholes. Now, this has been a big reason why AMC has been rallying, but I think on top of that, it goes a lot deeper. As you guys know, cost of borrow rates are almost 1,000% again. You have massive FTDs that are coming due every single day, and the box office continues to impress. So I think this is only one of many reasons why AMC rallied yesterday and is in positive territory here today, breaking above key technical levels. So I did want to put this in the video for all of you guys so you are on the same page here. Now, I do want to talk about the Fed minutes, and then we'll dive straight into all of the data behind AMC because that is very exciting. Now, the Fed minutes show members resolve to keep fighting inflation, while the January 31st through February 1st meeting concluded with a smaller rate hike than most of those implemented since early 2022. Officials stressed that their concern over inflation is high. Inflation, quote, remained well above the Fed's 2% target, the minute said. That came with labor markets that, quote, remained very tight, contributing to upward pressures on prices and wages. So what they actually get into here in this Fed minutes, we're not going to read the whole thing. I'm kind of going to summarize it for you guys. There was, quote, a couple members that said they would have done 50 basis point rate hikes. And that's why we got Fed Bullard and Fed Mester the other day saying essentially that, to try to get the markets ready for these Fed minutes. But the markets are looking at this like, hey, if they wanted to do 50 basis points at the last Fed meeting before we got the first inflation report that essentially went straight up again, right? The last inflation report was not good. The last PPI report was not good. It's expected on Friday. The PCE report is also not going to be good. The Fed didn't have any of that knowledge or information at the last Fed meeting. So if they were talking about 50 basis points then, how are they feeling now? Probably a lot more hawkish, right? So that's why the markets are taking a turn to the downside, and it'll be interesting to see how the last couple of minutes of this trading day really plays out. It could give you some pretty valuable insights for potentially market sentiment over the next couple of days. So that's the big point out of the Fed minutes. Some Fed members think it will take to 2025 to get inflation down to 2% and that they're going to stay higher for longer. Kind of the same things that we have been hearing, just reiterated on a more hawkish narrative. And again, I want to point out to you guys, this was before we got the hot CPI report, before the hot PPI report, and presumably before the hot PCE report that we will get on Friday. Very important context to point out in regards to these Fed minutes. So that is potentially, I think, going to be the thing that could cause some market fear over the next couple of days. So if you guys see the markets doing some wonky things, maybe selling off, maybe ripping to the upside, it probably has to do with the Fed minutes and analyst commentary that comes out about said Fed minutes. Now, if we take a look at the ortex data, AMC is still on the threshold securities list with a live short interest of free float sitting at 23.19%, 120 million shares that are currently sold short. Cost to borrow average of 574.28%, cost to borrow max of 905.66%, and cost to borrow minimum of 1.04%. Very, very high. Now we're getting the first update from Interactive Brokers in quite a while, and the cost to borrow rate 731.76%, 100,000 shares that were available to be traded, and this was per about 1 hour ago. So 700% on a real, live basis on these cost to borrow rates is very, very high. And that is something that you should also be pretty excited about. Now, if we take a look at the option activity, well, it's no surprise that today you are seeing 209 interesting options going into AMC, $45.5 million worth of options, positive order value of 8%. Pfft, come on, give me a break. 8%, again, it remains to be super, super low. And I think this just flies in the face of exactly what I've been saying. And maybe that's not the right way to put it, but this is more or less confirmation of what I've been saying, that they're using large and just straight up weird option activity to make it look like they don't have short positions. And I think that's why a lot of it is getting flagged in the interesting flow sentiment, because they don't want you to know what the short interest is or how exposed they are to an upside move in AMC, how short they are, in other words. So it makes a lot of sense why the option activity continues to look so bearish, especially with the interesting flow sentiment. Now, if we take a look at the FTDs that are coming due today and over the next couple of days, today you have 1.8 million, tomorrow you are going to have 1.5 million, and on Friday you are going to have 1.4 million FTDs that come due. And then next week, that's the week that I'm very bullish on. Next week is going to be earnings. AMC does report earnings on a day where 2 million FTDs come due, and that is on Tuesday. On Monday, you have 2.1 million FTDs that are due. On Wednesday, you have 3.2 million FTDs due. Thursday, 3 million, and on Friday, almost 3 million more FTDs. So if that does not make you excited heading into earnings with so many FTDs, with cost bar rates where they are, with the technicals where they are, I don't know what planet you're on, because this is exactly the dream setup you want heading into AMC earnings. If we take a look at the Stocko tracker data, 51,000 calls in the money for this Friday, 150,000 calls that are out of the money, 21,000 puts in the money, and 109,000 puts that are out of the money. If you take a look at March 17th, 80,000 calls in the money, 572,000 calls out of the money, 1 million puts out of the money, and 300,000 puts that are in the money. 1 million puts out of the money. That's where I think a lot of the actual option activity on the option chain is being held to try to cover up for that short interest, right? And that's a lot, because that's potentially up to 100 million shares, because 100 shares equals one option. You have 1 million options, potentially as much as 100 million. Even call it half of that, 50 million, right? Be more conservative. 50 million shares that are being hidden from the actual short interest, and you're seeing a short interest that is substantially higher than what Ortex is currently telling us. Now, if you take a look at the technicals, I don't know what is better here, the data or the straight up charts. You're above this downtrending line of resistance. This has been our major level for a long time now, and this has really been the level in which you have got rejected at over and over and over again. And today, and really yesterday, you broke above this. Today you're holding above this very comfortably. This line actually is around $5.60 per share, beautifully holding that at $6.18 per share. I think that is very bullish heading into AMC earnings for next week. The MACD just turned bullish, and the RSI is at 58.77, indicating that you are nowhere close to overbought or anything along those lines. So you're not really going to get that downside pressure, in my personal opinion, based off of some of the technical indicators. Now you're getting a couple of bullish indicators today. Price crosses the moving average, and you can see that. I believe that is the 20-day moving average right here. The moving average convergence divergence, the MACD, and that is where the MACD just went positive, like I just said. And the Williams percent R, which is not really a big deal, just showing that you are going up by a larger than average percentage over the last couple of days. So when you boil all of this down, what are the resistance levels? What are the support levels? And from here on out, the resistance level is going to be about $7 per share. Support level from here, I think, is going to be this downtrending line, and that's going to be, like I said, around $5.50 per share to $5.30 per share. You're off of that by quite a bit, so it's going to take a really big red day to get into bearish territory, and I think it would take multiple red days at that, so you're giving yourself a little bit more cushion for any potential downside move to come. So that is pretty much going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.